Gold is up 7.3% over the last month. Silver is up just over 10% as of the time of recording this video. And many people, off the back of what's going on right now, we'll talk a little bit about that in a moment, asked me on Sunday whether or not they should be looking at diversifying their portfolios with gold. So in answering that question, what I thought I'd do is highlight 3 ETFs that you can purchase to include within your portfolios to give you a little bit of diversification. Now, a bit of a caveat and a bit of a disclaimer for me. Obviously, you can buy physical gold. You can access gold in a number of different ways. In this video, I'm going to be focusing in on ETFs purely because it's easy for you to buy. As long as the market is open, you can actually exit your position relatively easy and it's low cost. But with that being said, please do your own research. There are a multitude of ETFs that you could access gold with. I'm only highlighting 3. So it's very, very important that you do your own research, make sure that you look around and then hopefully pick the best ETF that suits your needs and your requirements as an investor. So with that being said, let's get going. Gold has always been seen as a diversifier when it comes to your investment portfolio, purely because it is a commodity which has historically had a lot of value when you look all the way back through human history. And when you start looking at the long list of commodities as they exist, you've got silver, you've got platinum, you've got Brent oil, you've got wheat, you've got things like even sugar are commodities. When you look at that very, very long list, gold tends to rise to the top of that list because of its historic value. Number one, it's a finite resource and it's always been regarded as almost the currency of the gods. So it is a good diversifier to have within your portfolio. Now, I do want to talk a little bit about the context of where we are right now. And by the way, if you've not joined my Discord group, there will be a link in the description, the first link in the description. Go and join the Discord group. Today, I posted an update just in terms of what the world markets actually look like. Last week, all of the major indices were down across the entire globe. The only thing that was up was the VIX index. We'll talk about that in a moment. But if we have a look at it right now as I'm speaking, what you'll basically find is that, well, actually, a lot of the indices are still down. Earlier today, the Dow Jones was up, S&P 500 was up, the Nasdaq was up, the small cap 200 was up, and Euro stocks were all down. It seems to be taking a little bit of a reversal right now. I think the US markets, as I'm recording this, are only just opening. So they're opening down, and this is to be expected when you have what's going on with Russia in Ukraine. There's a lot of volatility, there's a lot of turmoil, there's a lot of uncertainty, and therefore markets tend to react because of that. And in that conversation, you then have to ask the question around, okay, so with so much volatility, uncertainty in the market, how can you shore up your investment proposition? Now, if you're going to be looking at using gold as a diversifier to your investment portfolio, it's really important to understand your asset allocation. What I mean by that is how much of your money are you going to put into gold? Now, I'm not going to give you a prescribed ruling because I don't know your journey, but really that is down to you to decide whether you're going to have a large amount of money parked into gold for a period of time, or whether you're just going to do a small amount of your money to give yourself a bit of stability. I think fundamentals are important to remember here though. You know, commodities like gold, they're a diversifier. They're kind of more like a safe haven. They're not going to be engines for growth. Your engine for growth is always going to be your equity. So it's all about creating a little bit of balance, being able to offset some of your risk using something like gold. And with that being said, let's have a look at the historical data when it comes to gold, because I think this was very, very interesting. I was doing a bit of research preparing for this video. Now, when you look at the historic values of gold, back in 1929, gold was only priced at $20.63. Now, in 1929, that's still a lot of money, but there were certain points in history where the price of gold really, really did shoot up. In more recent history, 2011 is a prime example of that. In 2011, we had the debt crisis, right? So the price of gold for the first time hit $1,917 in the August of that year. In 2010, the highest point for gold was $1,226. And ever since then, we've seen the kind of like value of gold kind of just like sit around, where are we right now in 2020? It finished at 1,771 when you look back over the data. Now, obviously, moments in history, times of inflation, times of war will obviously drive up the value of gold as people flock to that as a safe haven. And obviously, then you're going to have the equation of supply versus demand. So how can you actually access gold if it's something that you really want to have a look at right now? There are 3 ETFs that I want to show you. But again, please make sure that you're doing your own research. This is meant for educational purposes only. So the first ETF that I've got here is the Granite Shares Gold Trust. The ticker for this is BAR. Now, the performance for this over the last year or so is actually in minus, just under 1% loss. And that's because of obviously the fact that, people have been in equities for quite some time. The expense ratio for this being an ETF is relatively cheap. It's 0.17%. Now, importantly with this, and importantly with all of the ETFs that I'm going to highlight here, with the 3 that I'm going to highlight here, they are basically going to track the performance price of gold bullion. So this is actually tracking the price of gold bullion specifically itself. So, it may go up and down, obviously, because if the supply versus demand equation starts to slip and people get more confidence, then obviously you're going to see the price fall. But essentially what this is designed to do is track the price of the gold bullion every single day. So as the price of gold increases, you should see it increase if things continue to increase over this period of time of volatility. Now, this particular ETF has been around since 2017. It's got about $923 million in the actual fund itself. It doesn't pay an annual dividend, so that's obviously worthwhile just bearing in mind as well. The next one also doesn't pay an annual dividend. It's called the Aberdeen Standard Physical Gold Shares ETF. The ticker for this is SGOL. Now, the performance, minus 1% over the last year. Expense ratio, again, 0.17%. So low cost. This one, in terms of the value of the fund, is 2.5 billion. So it's much bigger than the first one that we've had a look at with the ticker symbol BAR. This has been going since 2009. And with this one, again, it is tracking the performance of the price of gold bullion. Obviously, minus any of the fees available to it that implied within that as well. So worthwhile bearing in mind. The third one that I have here is the Spdr Gold Mini Shares Trust, which has a ticker symbol of GLDM. Again, the performance of this is a -1 over the last year. Expense ratio 0.18%. This one does not pay an annual dividend yield either. But assets under management, this is a massive fund of $4.4 billion. It's been around since 2018. Again, it will track the performance of the price of gold minus all of the fund expenses as well. So those are 3 right there for you. Like I said, there are a ton more that you could access. So make sure that, when you're doing your research here, and this is the really, really important thing, and maybe a couple of points that I do want to make before I actually finish this video. Obviously, you know how an ETF works, right? So the ability to access, get in, get out, very, very nice. Low cost, really, really cool. But make sure that you're comfortable with how an ETF basically works, and make sure that if you are going to be looking to invest in gold, maybe you take these 3, go and source another 3 or 4, and then you do a comparison. What you want to be doing is you want to be comparing maybe some of the past performance. Yeah, you want to be comparing some of the expense ratio to the TER, how much it actually costs to run it. And then just doing the pros and cons on your side, making sure that you're okay with the ones that you actually going to be ending up buying if you do end up buying one of these to invest in gold. Research is very, very important. I've just highlighted a very simple way for you to do some research there, but try to make sure that you understand the objectives of that ETF. So read the objectives of the ETF when you look at the key information documents or the fund fact sheet, okay? Make sure you do that basic research. Secondly, this is great if you want to go and buy ETFs and you're building your own portfolio on your own. So you're making the decisions of what you have within your portfolio. If you're not doing that and you're using like a provider, maybe even Wealthify, who are sponsoring this channel right now, I would generally recommend that you actually have a conversation with them. Maybe have a phone call and just inquire about what they're doing. The great thing about using a provider like Wealthify or someone very, very similar is the fact that they are making the investment decisions on your behalf. Therefore, they have data available to them, which is really informing what choices they make, how your money is invested, how they're managing, how they diversify your portfolio. So it takes away a lot of the worry that people might feel having to do this kind of research where they're thinking about, maybe I need to get into gold. What are the best ones for me to ETFs for me to buy? How do I get into gold? If you're using a provider like Wealthify, you don't have to worry about any of this. This is about peace of mind and being in a position where you can sleep soundly at night, knowing that you haven't perhaps picked the wrong ETF for gold or done something or missed some information out that is crucial to your overall journey or investment outcome, essentially. So I'm sure that there'll be some questions. If you do have questions, leave them in the comments down below. I appreciate you again. If you've not joined the Discord group, go and join the Discord group. That's where we're going to be communicating, and I'll be posting in there sort of market openings, all that kind of stuff. Anything that I notice that will be interesting that I think that you guys should know. So we're just going to build a community within that and go from there. But anyway, guys, have an amazing week. I'll see you on Friday.